And we have two topics on our agenda today, the July 29th investment report and the fiscal year 2009 preliminary year-end results. And I believe that Mr. Pearson would like to take the investment report first. Is that correct?
With your permission, Mr. Chair, please.
Carry on.
Thank you. And to present the report, as always, I will turn it over to Jill Chara, our Treasury Manager.
Thank you, Bob. Good afternoon, Chair Horton and Committee Member Schneider. My name is Jill Chara, Treasury Manager, and I'm here to present the July 2009 investment report. As a non-quarter-end report, I'll just walk you through the activity for the month and the ending balances and entertain any questions you might have at the end. Page 1 of the attachment shows the activity and interest report. At the upper left-hand side shows the purchases and deposits during the period. We had $8.5 million in LAIF deposits and $4 million in purchases of federal agencies. Down at the bottom left-hand side shows the sales, maturities, calls, or withdrawals, and there were no sales or maturities during the period. We had $4 million in FHLB calls during the month of July. We deposited we withdrew $14.5 million from the City LAIF account, as well as we had a $500,000 principal pay down on the airport promissory note. And as you recall, several months ago, Council approved the renewal of the airport promissory note to be held in the investment pool. And the original amount of the loan was $7.8 million. When that renewed on July 14th, the airport paid down $500,000. It's a 20-year term for the $7.3 million remaining and pays an interest rate to the portfolio of 7% per year. The right-hand side of page 1 of the attachment shows the interest income for the period, and the interest on the pooled investments during the month of July was $395,396. Interest on the RDA funds held up at the LAIF money market account was $21,670 for total interest earned on the portfolio during the month of July of $417,065. On to page 2 of the report, we'll show the balances. The top of the page shows the ending balance of the portfolio as of the last report, which was June 30th. The total cash and investments held in the portfolio at the end of June was $174.3 million. Down at the bottom of the sheet shows the ending balance at July 31st, which was $165 million. Of that, it was comprised of $50.1 million held up at the state LAIF money market account. Approximately half of that are city funds and half are RDA funds. The portfolio also holds a $2 million certificate of deposit at Montecito Bank and Trust. Federal agency issues held at the end of July totaled $90.9 million. Corporate medium-term notes totaled $12.2 million. And, of course, there's the airport promissory note held in the portfolio at $7.3 million. Cash held in the money market account at Santa Barbara Bank and Trust at the end of July for our city operations totaled just shy of $2.4 million. And, of course, that is fully collateralized in a trust agency account for our benefit. And at the end of July, that was collateralized at 124%. The average yield to maturity during the month of July lowered slightly to 3.034%, and the average days to maturity, as shown on the report, which include the 20-year airport promissory note, totaled 799 average days. When you factor out that long-term note, the average days to maturity on the remaining holdings total about 495 days, average days to maturity. That concludes my report, and if you have any questions.
Yeah, that was the days to maturity was a little bit of a shocker, and then I read it.
Yes, it includes the 20 years.
Yeah, and of course, the bond is the lion's share of what causes that maturity to go up to 799 days.
Yeah.
So,
and I believe for the benefit of the public as well as the committee and council, we'll show that below the line so you can see both the average days without the airport promissory note as well as the average days with it for clarity.
Great. Okay, well, I really don't have any questions on that. Does anybody have questions? I'll accept the motion.
Motion to accept the report.
Second.
All in favor?
Aye.
Motion carries. Now I think we're back to Mr. Pearson. Item,
Yes, and Mr. Chair, this is a preliminary review of the results of operations of fiscal year 2009, which, as you know, ended last June 30th. And soon-to-be interim finance director Bob Samario will provide that report.
great. Bob?
Thank you, Mr. Chair, members of the committee. As Mr. Pearson indicated, this is the interim financial statements for June 30, 2009. Really, we have two parts to the report. We're going to look at the preliminary year-end results. We still have some final adjustments to make before we finalize the books, close the books in preparation for audit, but we think that the numbers are close enough for us to present them to you, so we're going to talk about how those look now. And then the second part is to cover the general fund in more detail. We're going to talk about what we were looking at in mid-year and how we ended the year in relation to what we were projecting in mid-year. We still have some outstanding deficit that we're going to need to address, and we're going to present you some options at least for how we close that final gap at the end of the year. I also wanted to make sure everybody understood that we were talking about fiscal year 2009, which ended about 3 months ago or 2 months ago. There's been a lot of discussion of deficits in relation to 2010, and we'll be talking with City Council in 3 budget sessions coming up in September about how we address the outstanding deficit of about $2.5–3 million in the current year. The focus today is really on the fiscal year ended June 30, 2009. So with that, we'll start with the interim financial statements and look at enterprise funds first. We're not going to spend a lot of time. The discussion really changes because during the year we talk about where we think we might be, what unusual trends there might be, what adjustments may be necessary. We now know what the final numbers are, so we can just tell you here's what they are and how we ended the year. So first, you can see that all the enterprise funds are listed, and the way it's organized is we have for each fund the revenues and expenditures. We have our amended budget. We have the actual year-to-date, so those are at June 30, so essentially almost final numbers. The variance in relation between the adopted budget or adjusted budget and year-end results. Then for expenditures, any encumbrances, and then basically the remaining variance. So we'll go through each one of them briefly. First is the water operating fund. You can see that we ended the year with about almost $1 million to the good in our revenues. And as you know, the water fund's revenues are primarily water sales, which is directly tied to weather conditions. This past year we've had drier than normal conditions, which means more water sales, whether it be for irrigation or otherwise. So that $1 million favorable variance is really tied to the climate. Always the case. In rainy season we see revenues under budget. Drier seasons we see revenues over budget. On the expenditure side, you can see that they came in about $2.3 million. After encumbrances, about $1.9 million under budget. A few reasons. In large part, they were holding back expenses during the year just because we had some vacancies, and also just generally speaking, holding back expenditures. Salary benefits alone, the savings in that area because of vacancies accounted for about $600,000. Some of the other costs that are variable during the year, like chemical costs, hard to predict what those would be, but they came under budget by about $400,000. So other than that, sort of just expenditures under budget on a normal basis. The wastewater operating fund, you can see that they essentially hit the mark on the revenue side, not as impacted as the water fund is in terms of the climate. It's much more stable because of the caps on the charges for wastewater. So they're right on the mark with revenues. On the expenditure side, I think that's pretty close to hitting the mark. $500,000 against a $15 million budget is doing pretty well. Downtown parking operating fund, they are under budget. In the revenue side, almost $600,000, and we've told you about this for the last year, that just because of the economic downturn, parking revenues are down across all lots. So that amounted to the end of the year about $600,000. They did hold back expenditures for that reason to make up for some of that revenue loss, and so at the end of the year about almost $500,000 under budget on the expenditure side. So that's really good. In the end, they ended up using reserves of about $127,000. The airport operating fund, interesting, it's kind of counterintuitive because you hear about the employments going down, yet their revenues are actually over budget by almost $640,000. And it was for two reasons. First is that they were able to realize about almost $400,000 in revenues as reimbursements from a grant for engineering costs that they incurred over the last several years that in prior years were never charged to a grant, but because they had some remaining funds in one of their FAA grants, they were able to charge those engineering costs that were related to those projects. And so they recovered this year about $400,000. So that's most of that. They also charge the airline employees parking, and this past year, they generated about $250,000 in revenues. It's unbudgeted. Not sure why it's not budgeted, but it's something they realize every year, and it helps to offset the cost of the shuttle that takes folks from the long-term parking to the airport. So those two factors is what generated the additional revenues. On the expenditure side, again, across the board, expenditures being under budget. Nothing of note to mention as to why they were under by $783,000. Golf course fund. Interestingly, they're actually better than they are under budget by about $78,000. Not a lot, but they lowered the budget last year in recognition of not only the anticipated construction at the golf course, but just the declining economy. And so their budget and actual are pretty well in line. On expenditures, they did hold back expenditures. Again, all funds we're recognizing the economic impacts, and we're trying to hold back expenditures. And the golf course did the same. In the waterfront operating fund, revenues slightly under $392,000. We talked about this at mid-year and throughout the year. It was primarily related to slip transfer fees. They were seeing a big decline there. They actually projected more like $700,000 decline in revenues, and so the end of the year actually a little bit better than they thought, at least in relation to where we were at mid-year. On the expenditure side, again, talking with the folks at the waterfront, nothing of note, just across the board, expenditures coming in under budget, salaries, supplies and services, etc. So, unless there are any questions, we can turn our attention to the general fund.
We have one question.
It's more of a comment than a question. Did I hear you say that you're charging the airport employees to park now?
The airline employees.
Airline employees.
That's right.
Thank you. Then I
Sure.
don't have any comments.
Okay, so we'll turn our attention to the general fund, and I'm going to refer back to this because I think this is an important schedule. This shows in the general fund our expenditures by department. It shows the adjusted budget or amended budget and our actual expenditures by the end of the year. Now, in the general fund, we don't really have too many outstanding adjustments to come up with final numbers. But mostly in enterprise funds where we recognize depreciation, we capitalize fixed assets, we make those kinds of adjustments. But in the general fund, those numbers are pretty much final, even though we're calling them preliminary year-end results. And what I wanted to point to is that the adjusted budget of $110 million, $110.8 million, that in relation to that budget, we came under budget, before counting encumbrances, came under budget by over $4.3 million. That's a significant achievement. When you back on encumbrances of $600,000, we're still to the good by $3.7 million. Now, a couple comments. The first in the encumbrance column, $600,000, you'll see that that number is lower than it has traditionally been in prior years. It's usually closer to $1 million, $1.3 million. This past year, we did a much better job in evaluating and analyzing our outstanding encumbrances or purchase orders, essentially, to see what items could be closed out because they're either stale, have been inactive, or maybe we don't need them anymore. And so we look at those each year, but this year we did a much more concerted effort and comprehensive effort working with departments to close out a lot of purchase orders.
So, a lot of the encumbrances that you think are valid, are they primarily goods and services, major equipment? How would you categorize them?
I would say in the general fund, they're primarily supplies and services. Just because we don't spend a lot of money on capital in the general fund, and that would be tracked separately. So this primarily supplies and services. We don't have any encumbrances, of course, for salaries and benefit costs. We don't encumber those funds. So I would say that's a
So there's no major equipment sitting out there that you're...
Not really, no.
At the university, that used to be our biggest item, was huge pieces of scientific
Sure.
equipment that would be many millions of dollars sometimes.
Yeah, and Mr. Chair, and those kinds of capital expenditures are tracked in a separate capital outlay fund. So for the most part in the general fund, what you're going to see are just the operating type of expenditures. And I wanted just again, because there's always sometimes confusion on encumbrances. An encumbrance is nothing more than an executed contract to purchase goods or services. Ultimately, it will become an expenditure. It just hasn't fully matured yet. An expenditure is only recognized when we have actually received goods or services, regardless of when we pay the money. But once we receive those goods or services, if it's by June 30, we recognize it as an expenditure, even though we may pay that bill later on. So these are items for which goods and services have not been received, but they've been on order or are on order. Okay. So we go back now to revenues. So this is revenues in the general fund, looking at the major categories of revenues. And it sort of tells a kind of a bigger story than we typically would tell, in that it shows not only the approved budget, but what adjustments we made at mid-year when we were before the Finance Committee and Council and telling you that our revenues were declining and that we were going to have to come up with some kind of a strategy to address the projected shortfall in those revenues. So we have the March 3rd, 2009 mid-year adjustments, which gets us to the amended budget, which has not been changed so far or yet as of June 30. And then we show you the preliminary year-end results, and again, those are pretty close to being final. If they're going to move, they're going to move less than $100,000 in total. And then the projected variance. So what I wanted to point out was, and remind you that at March 3rd, if you look at just the first four revenue numbers, those are our tax revenues, that's when we were telling you that at that point we're expecting about a $2 million shortfall in those four revenues. We also saw that some of the other revenues were going to be short: business licenses, franchise fees, and property transfer tax. But the big ones, the first four, where we said we have a problem and we need to make some adjustments. Below that, you can see some other adjustments, and those are actually the adjustments made in part to address the expected shortfall. We decided to transfer in $1 million from the Workers' Comp Fund reserves, or Self-Insurance Fund reserves, $500,000 from the Street Sweeping Fund, and then we also had the ICS funds rebate starting at mid-year, 3%, I think, or 6%, which turned out to be 3% for half a year of their charges. And so that was part of the adjustments.
We have a couple questions.
Sure.
Helene and then Ian.
The sales tax projected variance for the preliminary year-end results, does that also include your projection of what we will see in the fourth quarter of
Yes.
2009? But we don't have those numbers yet, but
Right.
this is what you should expect.
This is just an estimate. That's correct, of what we're going to see this September as our final cleanup payment.
Okay. So hopefully we're a little conservative,
Yes.
but we can, okay.
We believe
but,
we have been, but
But you
yes.
never know.
You
Okay.
never know.
Just wanted to
Not
check
in
on
this day
that.
and
Thank
age.
you.
so what I
The
wanted to
TOT, Bob,
I'm sorry.
this is through June 30th.
That's correct.
And where I'm going is July, which is this year, this fiscal year. We have those numbers in. And what we've been seeing is the trend since last November has been teens and 20s in the down arrow, which means that this number of $500,000 plus does not reflect, should be taken with a grain, in that July, August are our heaviest months, and last July and August didn't have that kind of slide
Right.
to it. So my point is that this July and August going forward, at the end of the day, when y'all are hanging around here this time next year, this number is going to be significantly bigger. Is that fair to project, maybe?
It's true.
Unless it all
Mr.
comes
Chair,
back and it's wonderful
yes.
in December or something,
Mr. Chair,
you know.
Councilmember Falcone, I think it's fair to say that, yes, July and August are the biggest months. In fact, September is also a big month. We do know that July this year, just last month, came in pretty close to what we projected it would when we were developing overall 2010's numbers, at least in how we measured our current year deficit of $2.5 million for 2010.
Right, but how much, what was that in percentage?
I think it was.
I can't remember.
We projected 15%.
15? Was it 15 or was it?
Jill Tara, Treasury Manager. For July, we initially, as part of the adopted budget, forecast a down 8% for July. We've since then revised our forecasts, and we ratcheted it down to down 15%, and it came in July down 14.2.
14.2? Yeah, I just couldn't remember that.
So it's a little better than our estimate, a little worse than the budget, but we'll be bringing those numbers back to you
But
for
last
10.
July was what?
That I don't recall
Yeah,
off the
it
top of
was
my head, but there was growth last
Flat, let's say. Yeah.
Sorry. I think, as I recall, it was up 1 or 2%.
Okay. I
The
guess
problem
my
is
point
last
is,
August was up 10% or almost 11.
Yeah, and we're not going to see those sorts of numbers. So I guess my point is that in going forward with the budget into next year, we have to factor in that this July and August look nothing like last July and August.
That's correct.
Correct?
That's correct.
Thanks.
The other thing it's probably worth commenting on is that some of the signs of the economy bottoming out are things like people bottom fishing for houses and things like that. TARP money going into cars, but the employment figures, on the other hand, are not picking up. And so people still don't have jobs, and it's in California, the rate went over 10%. So in terms of TOT snapping back, I remain skeptical and expect that we'll see, about the best that I'm hoping for is not too much down or flat.
Right.
But to get back on any kind of a curve that we were on, I think is going to take more than 1 year and maybe take 5 or more. Time will tell on that.
I agree. So if you look now at the second to the last column, the preliminary year-end results, these are in our most recent estimates of how we're going to end the year, or basically not estimates anymore, they're really sort of final numbers. Maybe in the sales tax case, we have some estimate portion in there, but for the most part, it's final numbers. And you can see that even in relation to how we amended the budget, we've seen further declines in our key revenues. Sales tax, for example, we lowered that by $1.5 million at mid-year, and that was in March. We were developing those really January, February. Since then, they've deteriorated to the point where now they're an additional $1.2 million below our amended budget. Same with bed tax, $727,000 below what we projected in mid-year, et cetera. So we saw a continuing decline. Down at the very bottom, the last item, you see the anticipated year-end variance. We made no adjustments for that in mid-year, but we kind of knew that it was just a budgeted number that we never ever see realized. We just hope that we're going to see variances in both revenues and expenditures, favorable variances. And we did, of course, experience that on the expenditure side, but nothing on the revenue side. No, in fact, we see deficits. So really, and now at year end, we're looking at a variance of almost $4.2 million to the bad, and that's in relation to the amended budget. If you compare that to the adopted budget, it's about $5.3 million shortfall. That's a significant shortfall overall. So with that, what I'd like to do is just have you turn to page 1 of the agenda report, and I just want to just recap for you the strategy and then how we ended up in relation to that strategy we developed at mid-year. And you can see at the bottom of page 1 of the agenda report, there is a little table which shows what we were seeing at mid-year. We were seeing a shortfall in our tax and non-departmental revenues of almost $2.4 million. Our departmental fees and charges were expected to be about $1.5 million under budget, primarily parking violations, but then also in the planning and building area, we're seeing a decline in revenues. And then that anticipated year-end variance that I mentioned, we knew we weren't going to get any of that. And then we also had some unbudgeted costs for retirees and public safety. So we're looking at about a $6.7 million problem at mid-year. On the next page, you'll see on page 2 the strategy that we took to council and that was adopted by council to address that shortfall. I alluded to the departmental savings. We had established a target of $3.5 million. At that time, we thought that'd be really a high threshold to achieve, and yet they came in at $3.6 million under budget. So they exceeded that target, which we thought was really a tough one. We are also going to be using appropriated reserves that were created as part of the adopted budget in 2009 for this exact reason, deterioration of revenues where they're still outstanding in certain certainties, and we're going to use that money. We brought in $1 million from the workers' comp fund or self-insurance fund. Those are accumulated reserves in excess of what the actuary said we needed, and so we used $1 million of that, essentially a rebate. And then the internal service funds, as I mentioned, they brought in $243,000, the $500,000 in street sweeping fund reserves, and then we deferred some capital, $725,000. Again, since then, we have seen further deterioration in our revenues. So in the end, by year end, we're left with about $2.4 million in a shortfall. Our revenues are below expenditures overall after these strategies, and primarily because of continuing deterioration of revenues, we're still left with a $2.4 million shortfall. Page 3 and 4 discuss some of those options, some of the options of how we can address that shortfall. We still have more money in our self-insurance fund, our accumulated reserves, again, above what the actuary says we're required to have. Essentially, it's premiums that are charged to other departments and funds and that are in excess of what the costs were. And so we track those, and we know how much is related to the general fund, how much is related to enterprise funds. And so we still know that we have about 2.4, this says 2.4, but actually it's closer to $3 million that we have in reserves in that fund that are attributable and were paid for essentially by the general fund and could be repaid to them. In theory, or really in reality, if we wanted to, we could take all of that and we would have enough to cover the $2.4 million shortfall in the general fund. But some other options include the street sweeping fund. We still have more reserves in there, about $300,000. We were kind of proposing to leave some money in there because just for like an operating reserve, they have about $450,000. We thought we could take $300,000 of that money if we wanted to. We already took $500,000 during the year as part of the mid-year adjustments. We also have what's called a City Hall allocation fund. It really operates like an internal service fund. We capture all of the facilities maintenance and utilities costs for this building and City Hall. And instead of writing, we'll get a bill for, let's say, utilities. Instead of charging that bill to every single program in this building and in City Hall, we charge them to one program, one fund, and then we allocate them through a methodology based on square footage and other bases. So we capture those funds in that account. We also use that fund to accumulate reserves for the City Hall switch. We have a switch in City Hall, which is right adjacent to the Finance Department offices. And we replace that about every 10 years or so, and we've accumulated funds for the replacement of that down the road.
So is it
City Hall switch, telephone switch.
Right. Is it not the case, though, that you need that money?
Yes, we would.
So to spend it wouldn't be high on my priority. You're going to need it at some point.
We would eventually need money to replace the telephone switch. It could be 5 years from now. So it's just a matter of priorities. Do we use some of the money now and try to find a way 5 years from now to replace it, or do we not use that? It's just one option. We're not recommending anything at this point.
I totally understand that, but are you saying that there's a piece of technology like this that's going to go 10 years? I just find that hard to believe.
Again, we're talking about the telephone switch.
Right.
So the estimated replacement cost of that is about $500,000, and that's how much money we have accumulated
But
in
you
that
have to
fund.
replace that every so many years.
Every 10 years or so.
That's why I'm saying 10 years seems like a really long time for technology, but maybe not.
Yeah, and the good question. I really can't speak to that. I'm not sure what the ultimate cost
Do
would
you
be.
have a quote on this replacement?
No, this is just a really
I
rough
understand.
estimate.
Okay.
And the last two are things that we probably wouldn't be recommending using, but we want to at least let you know that there are some funds that are out there in reserves. We have the capital reserve that it's a fixed amount per city policy of $1 million. We've never used it. It's there. It's not part of our disaster reserves or budgetary reserves. It's a separate reserve, and theoretically would be available to address this shortfall. And then we also have the budgetary reserves. That's the 10% number of our operating budget. There's about $1 million remaining in that fund that could be available and used if necessary to address the shortfall. I don't think we're going to be recommending any of those two when we come back to you.
The item 4 amount was one that the Infrastructure Task Force Committee talked about, and their recommendation, as I recall it, was that this amount is really not meaningful, and we either need to increase it or do away with it.
Yeah, that's one option, just to shift it over and add it to for our budgetary reserve and not show it as a distinct reserve. So that's really, we just wanted to give you information, give you the results, and just discuss with you those options we're going to be considering. We will be back to you in mid-September with a report on just our recommendations and how we balance that $2.4 million shortfall in the general fund, and it'll likely come from one or more of these options.
Questions for the committee? I'd like to recognize Mr. Pearson at this point. Now, I want you to understand, Bob, that you can come to any of these meetings since you want to. We're not going to exclude you. But Bob and I did have the pleasure of having lunch today, and I told him that Bob and his staff have really made my job as chair very easy. They're always open and accessible to me, answer any question, anytime, and sometimes it is day and night and on the weekends. And it's really been wonderful to have such a supportive group there that answers anything and is ready and always pleasant when they're doing it. So I want to appreciate not only you but your staff and wish you the best in retirement.
Thank you, Mr. Chair. Thank you very much. It's been a pleasure, obviously, for me as well.
Anybody else?
Yeah. I can't not say something to you. The city finances, the city is a complicated place, and anybody who tries to make it simple just doesn't really fully understand the ins and outs and the complexities that it sounds like a lot of pots of money. It is a lot of pots of money, and they're interwoven and they're intertwined, and you can't really pull someplace without having something else happen. And Bob, you've taken one of the most difficult, I'm a lawyer because I don't do math, all right? But you've taken really one of the most complicated systems that I've ever been involved with and made it completely understandable. I don't quite know how you did that, but if you can get me to understand it, you're some sort of wizard. It's been an absolute pleasure to work with you and know you and consider you a friend. And the world, city's lost, but the world in general has gained a tremendous asset. And we're going to wait till after you retire to go out and have our little lunch or whatever.
Thank you, Ia.
I also just want to add my appreciation and thanks for your many years of service. I think it's a testament to your integrity in that anyone, whether it's a member of the media, any one of our negotiating, bargaining units, or on staff, or any one of us on the council for many years, know that they can come to you and get the straight talk about what the issues are, where the money lies, what the challenges are, and if there are ideas of how to either save some funds or really make it more transparent in the city process. They know they can come to you and get the right answer, and without any fluff next to it, or really and without any rhetoric behind it. And that's not easy to do with a lot of different people with a lot of different agendas asking those kind of questions. And you've been consistent that this whole time, at least in my experience working at the city. So I want to thank you for that. I think it makes the city look good and shows how well run it is, and we wish you well, and we know you'll be watching from afar a little bit, but not too much. I hope you enjoy your next chapter in life.
Thank you, Helene.
Okay, meeting adjourned.